Does Beforepay do credit checks? It is the question that keeps so many of you up at night, tossing and turning, worrying if a single click on your smartphone is going to ruin the credit score you have spent a lifetime building. You are entering retirement, or you are already there, and you know how precious that credit score is. It is your financial reputation. So when you hear about an app like Beforepay that promises to advance you cash before your next payment arrives, your immediate, protective instinct kicks in. Are they going to pull my credit report? Is this going to hurt my standing? I understand that fear. I understand it deeply. When you are living on a fixed income, whether it is a pension, superannuation, or part-time earnings, cash flow can get incredibly tight. An unexpected medical bill pops up, the car needs a sudden repair, or the utility bill comes in higher than you ever anticipated. You need a bridge to get you to your next payment, but you are terrified of traditional lenders who want to dissect your past financial mistakes and ding your credit report just for asking for help. So let me give you the straight, unfiltered answer right now: no. Beforepay does not do traditional credit checks. They do not run a hard inquiry on your credit file when you apply, and using their Pay Advance service will not lower your credit score. Hear me on this: they do not care about what happened 5 or 10 years ago. They are not looking at your old debts or your past financial history. Instead, Beforepay uses what is called an affordability engine. When you sign up, you connect your bank account, and their system looks at your current financial habits. They want to see your real-time income and your regular expenses today. They require you to have a regular income of at least $300 a week after tax. Now, for my retirees, here is a critical rule you must know: no more than 50% of that income can come from government benefits like Centrelink. If you meet that requirement, they assess your eligibility entirely on your ability to manage your money right now, not on a score from a credit bureau. But stand by. Just because they do not check your credit score does not mean this service is free money, and it does not mean it is without risk. This is where so many people get tripped up, and I need you to listen to me very closely. Beforepay charges a fixed 5% fee on the money you advance. If you cash out $100, you owe $105. If you take out their maximum limit, which can go up to $2,000 depending on your eligibility, that 5% fee adds up fast. While 5% sounds small compared to those predatory, horrible payday loans that charge 20% setup fees and massive interest rates, you must look at the big picture. Beforepay requires you to pay that money back quickly, usually within 62 days, aligned directly with your next pay or income cycle. The app will automatically debit your bank account the moment your income lands. The danger here is not a credit check. The true danger is the cycle of dependency. Think about it. If you are already struggling to make ends meet this month, and you borrow $200 from your next income cycle, what happens when next month arrives? Your next income is automatically deducted by $210 to pay back the advance and the fee. Now you are starting the next month with even less money than you had before. What do you do then? You borrow again. And again. You trap yourself in a loop of borrowing from your future self just to pay for your present. That is a financial quicksand that can swallow a retirement budget whole. Furthermore, you must realize that even though Beforepay does not report to credit bureaus, traditional lenders like major banks are getting smarter. If you decide to apply for a credit card, a car loan, or a mortgage in the future, those banks will ask to see your bank statements. If they see a repetitive pattern of you using Pay Advance apps every single month, they are going to view you as someone who is living beyond their means and struggling with basic cash flow. They might deny your loan application entirely, not because of your credit score, but because of your banking behavior. So, what is your actionable takeaway today? If you are facing an absolute emergency, and I mean a true emergency, not a luxury purchase, and you have no other options, using Beforepay as a one-time safety net will not damage your credit report. It is a far better option than a predatory payday lender. But your first line of defense must be to look at your bank account today and create a strict, line-by-line budget. Find where the money is leaking. If you are consistently falling short before your income arrives, a pay advance is nothing more than a temporary band-aid on a gaping wound. You need to adjust your spending or find ways to supplement your income before you touch these apps. Protect your money, protect your future, and remember that true financial peace of mind comes from owning your money, not borrowing from tomorrow to pay for today.